Друзья, вы знаете, я очень редко говорю на тему криптовалют и вообще криптомира и децентрализованных финансов, блокчейна. Мы очень мало об этом говорим. Почему? А причина очень простая. Я инвестиционный банкир, и когда меня спрашивают, а могу ли я реально оценить, сколько сегодня должен стоить, я не знаю, там, биткоин или эфир, сколько должен стоить даже этот пресловутый Dogecoin, то, черт возьми, я не могу это оценить. По той простой причине, что если я вам скажу точно, что биткоин завтра должен стоить 40 тысяч или 20, меня нужно сразу отвезти в кащенко, вот прямо сразу. Туда приковать наручниками и на этом закончить мою карьеру. С другой стороны, мы прекрасно понимаем, что блокчейн – это революция. Она произошла на наших глазах. Децентрализованные финансы – это та штука, которая захватит очень скоро мир. Будут существовать инвестиционные банки или нет в этих условиях? И не только инвестиционные, кстати, вообще банковский мир. Будут ли существовать финансовые посредники? Я не уверен до конца. Возможно, их роль сократится. Не забывайте, что эти самые цифровые валюты, в конце концов, они в какой-то момент будут работать таким образом, что банки не нужны. Есть центральный банк, эмитент этих цифровых валют, и есть непосредственно население. Все те, кто потребляют это, население, бизнес и так далее. Для чего здесь нужны посредники в виде банков, я не знаю. Друзья, я решил сделать просто. Поскольку я не считаю, что я профессионал в этом деле, то лучше поговорить с профессионалами, людьми, которые, во-первых, они из реального финансового мира. И для них что такое финансы? Это не сказки. Это люди, которые много лет работают в финансах. И в частности, я вот попросил для этого настоящего профессионала, человека, который в прошлом был инвестбанкиром, который работал в инвестиционных банках, каких он сам расскажет. Так вот, я попросил Джона Куина, главу департамента инвестиций и генерального партнера в Decentral Park Capital, человек, который работает каждый день с криптоактивами, с этими технологиями, с распределенными финансами. Я решил, что лучше вместо того, чтобы гадать, просто напрямую задать человеку вопрос. Вы уж извините, друзья, я буду общаться с ним на английском, потому что Джону так попроще. Все-таки у него родной язык английский. Ну, не повезло ему родиться в Рязани. Джон, how are you?
Здравствуйте. Добрый вечер.
Добрый вечер. By the way, from where you know Russian?
So I studied Russian and economics in undergrad in university, and then I went to Russia. I did investment banking, and then I married a girl who finished the филологический факультет в МГУ. So that's how I learned Russian.
So you love Russia?
Yeah, of course.
It's great. It's much more easy to continue on this base. Okay, John, first of all, let me start not from the big points. What does it mean, the decentralized finance, and what is DeFi? We call it DeFi. And what are you doing there and how are you making money? I would like from the very simple question. What does it mean, this Dogecoin, and can you evaluate it? Frankly speaking, I don't understand. Maybe you?
Yes, Dogecoin is
Dogecoin.
Dogecoin, yeah, Dogecoin is considered a joke. It was a joke when it was basically a hard fork of the Bitcoin blockchain, and it was created as a joke, and it's become similar to GameStop and other assets. It's become a meme, like a meme investment, and it's gained a lot of popularity because of Elon Musk, and so Elon Musk has given credibility to a project that was a joke, and now people are taking it seriously. But there is, I would say, no fundamental value of Dogecoin other than the shared belief of people that are buying and selling it that there should be value of Dogecoin. But you're right, there's no intrinsic value of Dogecoin, except Elon Musk is the only person in the world that could decide, I want to make Dogecoin an interplanetary currency. And so I think that there's some value there because Elon Musk might decide to do that. But generally, people in the cryptocurrency industry don't take Dogecoin seriously, but retail loves Dogecoin. But it's a speculative asset, and I don't think it ends well long term.
Okay, but frankly speaking, I would like that we will start discussing only about cats coin. I like cats as well. Okay,
Okay.
but
It's going to be a short conversation because I'm not a big cat coin guy.
yeah. Look, my question is very simple. Finally, what is it DeFi? Or you call it DeFi? How it's called? Decentralized finance.
Correct.
DeFi or DeFi? How you call it?
We call it DeFi.
DeFi.
Mhm.
Okay. So what is DeFi? Can you
Okay.
explain exactly to the people that they maybe not so understand the process? Very simple, in a very simple language.
Okay, DeFi is a subsector of cryptocurrency. It's the fastest growing subsector of cryptocurrency, and it's really trying to decentralize finance. So decentralized and finance, DeFi. And basically it is, if you can imagine any financial primitive, like lending, like trading, like insurance, that's just one primitive. So insurance would be one primitive, or trading would be one primitive. So with it, basically people are building protocols, much like the protocol that's helping to run this video conference call is TCP/IP. It was created in the 1980s as the foundation of the internet. The DeFi is basically financial primitives that are also acting as protocols that are basically the underlying back office or back end of the financial infrastructure. So to give an example, if I have Bitcoin and I want to basically borrow money against my Bitcoin, I can go to a lending application and I can say, okay, I have $100,000 worth of Bitcoin and I want to borrow 50,000 US dollars. I can basically engage with the protocol and say, I have this collateral. I can put it into the smart contract, and someone who I've never met, and it could be in Russia, it could be in China, it could be in England, they could say, basically on this collateralized loan, I will lend $50,000 based on an 8% interest rate, for instance. So they insert $50,000 into a smart contract. And so I can then receive the $50,000 and I need to make this interest payment periodically. If I don't make the interest payment, or I don't pay back the balloon payment on the loan, then they automatically get to take my collateral inside the protocol. So what's amazing about this, Yevgeny, is that I am basically getting value. I'm taking a loan from someone that I've never met, from somewhere outside of where I live, and create this shared value. And this person that is anywhere in the world is getting 8% interest yield from me, and they're basically off of their capital. And so what's happened is, usually there would be a bank or some sort of financial intermediary between the borrower and the lender to make sure that we trust one another because we're going through a bank. With blockchain, it basically serves as, you can think of it like trust as a service. So basically, I don't need to trust this person. This person doesn't need to trust me. The code is the law. And basically, we can participate and create shared value by participating with the protocol. But everything happens, supply, demand, right on the protocol, metal on metal. But that creates a huge amount of potential value, because really anyone with a smartphone and an internet connection can become part of this financial world. And as we saw, like in the 1990s with the internet on a global technology, and the disruption that can occur, we saw it in the music industry, we saw it in the publishing industry. And now with blockchain as this trust as a service, we're starting to see how this can impact the financial world. And I've worked inside of large banks like Deutsche Bank and Credit Suisse and Credit Suisse First Boston and Fleming's. And there's a lot of fat inside these banks. And this takes away the fat, because the middleman, the banks and other financial intermediaries are middlemen. They are replaced with middleware. And so the supply meets demand right on the protocol. And that's what makes it so interesting, is because there's people able to work with one another, collaborate through the protocol, create shared value with on a permissionless basis. Nobody can tell me I can't take this loan. No one's telling the other person that they can't make this loan. We're doing it in a decentralized way with no permission, but it's working and it's growing very, very fast. Tens of billions of dollars have been created in market value and volumes just in the last 18 months. And it's growing like this. It's going up to the right, parabolic curve.
John, you said a very interesting words. Very interesting words. You said no permission. It's great. What do I mean? Do you know that now the current world is based on permission? But what does mean permission? Not only permission on compliance, but the hydra of compliance now is killing real business. And now, who is ruling financial institutions? Who is ruling banks? Who is ruling insurance companies? Small gray man that nobody knows, with his rules of compliance, IML regulation, etc., etc., etc. Every day new instruction. How do you think DeFi, is it a civilized, yes, answer of normal people to this banditism in finance? How do you think?
Interesting. Yeah, I think there is a lot of people that want to be able to be free with and do what they want to do in their own actions, and not to be controlled by financial institutions. Especially, I think interesting for Russia is that the American government, because of the U.S. dollar, has almost weaponized money. And
absolutely right. Absolutely right.
In order to pursue their foreign policy objectives. And so what I think is interesting about decentralized finance is it's moving away from that hegemony of the US dollar and the controlled financial system based on the US dollar to something that's new. And what we've seen in history is when things move from analog to digital, and that's what I think is happening today, that the financial system is moving from analog to digital, that there's an amazing amount of value creation. There's also some value destruction, as we saw from the publishing industry, we saw from the music industry. But as those changes take place, I think there's a lot of shared value for everyone in the world. I think everyone would recognize that the web has created shared value. And today, I think with decentralized finance, we can create the new financial system. And that's what we're seeing, is basically a new financial system that's being created before our very eyes.
Yeah, but from the second point, you are distracting the current system of control, and you are distracting the current system of view. Big Brother cannot see everything, but if Big Brother doesn't see it, how regulators from everywhere in the world, how they control it? And it doesn't mean that you are distracting the whole financial modern system. What does it mean? That you are the biggest enemy of that regulators? And aren't you afraid that they will try to destruct this new system as well?
Right. Well, I mean, I think if you look at people in leadership positions, like the head of the SEC in America is a man named Gary Gensler, who has actually taught blockchain courses at MIT. And if you look at Herman Greff, the chief executive officer at Sberbank, he is very deeply informed about blockchain and is looking at it as a technology to embrace. And I can't really speak to the Russian regulatory regime, but in the US, they view this technology similar to the World Wide Web. And if the US could have said in 1995, this is too disruptive, this technology, the web, we don't want anything to do with it. And imagine the value that was lost if the US had taken that decision. I think in the same way, the US regulators are saying, this is a golden goose. This is a goose that creates golden eggs. And we don't want to kill the goose, because we don't want to kill the innovation. We have to let it keep producing golden eggs. I think that where regulators will be very strict is when things go from crypto to fiat, the on ramps and the off ramps into crypto. And there's going to be a lot of focus on the OTC desks, on the exchanges, and those types of institutions where they can track your value, and they want you to pay taxes. That's for sure. That's the main thing. But then I think that the blockchain is a perfect record of every single transaction. So from a regulator's perspective, it's so much better than cash, because every transaction that's ever happened inside the protocol exists back to the
Right.
very beginning of the protocol. So it's a perfect audit trail. And so I think the regulators are getting smarter and saying, okay, we can track these transactions. It's almost perfect for Big Brother, I would argue. But and then where the blockchain transactions intersect with fiat transactions, that's where we're going to get people. And if you do all this activity, make all this money in crypto, and you try to convert back into fiat, and you don't pay taxes, that's where I think you have problems, both in America and in Russia, because the government definitely wants taxes.
Yeah, I understand that their main goal is taxes, taxes, and taxes, and they can hate each of them in the politics, in economics, but when they start to speak about taxes, they're very big friends everywhere in the world, and we know it exactly. Okay, but never mind. Let's talk a little bit about the DeFi projects. So, how can you evaluate the DeFi projects? Is it some ways of valuation them? By the way, I didn't ask you before, but as far as I know, about valuation, we will talk a little bit later.
Okay.
Just now, I would like to ask you another one very personal question.
Yes.
Look, you was one of the main investment specialists in Deutsche Bank. You was ruling the fund, as far as I understand, more than the volume more than $200 million, right? You was working like investment banking in Credit Suisse, in Fleming. You was very successful and you was young. And 6 years ago, you switched your life and you started to deal not like with the regular finance, but with cryptocurrencies. It was a huge risk. Am I right? Why you have taken it?
It was a big career change. Yes, 6 years ago.
You want to be billionaire in this field?
I'm not sure that. Yeah, I think that there are many billionaires. I'm not one of them, but it's that there's been massive value and wealth creation from cryptocurrencies in the last 10 years, which I've participated in, and have made a lot of money for my investors, most importantly.
Okay, great. So you're looking on the game win-win.
Yeah, exactly. I win when my investors win, and I like to win.
Yeah, it means two-way road, not
Yes.
one-way road only for. I like the same, trust me. Okay, so now some words about the valuation of these projects. I mean, not this decentralized financial products. Can you tell us exactly? Can you explain me how can you evaluate them? How I'm making valuation?
Yes, of course. So we talked about financial primitives, and that each protocol represents a single financial primitive. So we could talk about a trading protocol like Uniswap or SushiSwap. We could talk about a lending protocol like Aave or Maker, or we could talk about an insurance protocol like a Nexus Mutual. So each one of those protocols does the one financial primitive, but each one of those financial protocols can be connected. They're composable with other financial primitives, and so that you can create more complex financial services based on the combination of these financial protocols. So the way that you value these is that, you know, if you step back for a second, all blockchain transactions are transparent and basically open to the public. So basically every single transaction on one of these DeFi protocols, you can see from the very beginning of the protocol. So you can see how much is it growing, which is important. So growth in cryptocurrencies and DeFi is very important, just like it's probably the most important driver for equities, the valuation of equities. But you can also look at inside the code, you can say, okay, if for a trading protocol, it gets 5 basis points of every trade, and based on volumes. So for instance, 2 weeks ago, Uniswap was doing about $6 billion worth of volumes so basically people trading tokens within the protocol, and then there was a 5 basis point value capture, and so you could say that was the cash flow, the amount of volumes times the value capture percentage, and so it's creating an income stream over time that can go up, can go down, but generally the dominant financial protocols have been growing very steadily up, and so you can say, okay, based on how much the revenues of this protocol are growing, and the margins as well, that what is a reasonable valuation, a multiplier to put on this cash flow. And different financial industries have different multiples, and they're also, those multiples are partially driven by the growth rate of the cash flow. But what's important to note is with Dogecoin, there's no revenues. There's no, it's 100% speculative demand. Within these DeFi primitives and protocols, there is demand. There is the case where I want to borrow this money and someone wants to lend me this money. And when I borrow $50,000 and put up $100,000 of collateral, that amount of value has been put into a smart contract, and you can measure that. And so, and basically over time, lots of people, lots of this activity creates a growing amount of collateral within the ecosystem, which is total. We call it total value locked, and that is the main metric within DeFi to say, okay, how fast are things growing in terms of collateral basis? But then, because there's real cash flows, because there's real assets, you can apply real traditional financial valuation methodologies to come up with an estimate on fair market value. So if something is growing 20-30% a week in terms of volumes, then it's pretty interesting, right? Because if it can continue to grow that from that growth rate, it can become a market cap in the millions of dollars to the billions of dollars. And if it's providing a service that perhaps that you or I need, a financial service, then there is value there. And I think that you're not valuing equity, but you are valuing a protocol like TCP/IP that's basically helping run this conference call. But we didn't have the ability to buy a small percentage of the TCP/IP protocol in the 1980s. But what if we did? Imagine in 1985, Evgeny, you bought one coin of the TCP/IP protocol, and every time since 1985, you got paid 1/billionth of a cent every time someone did a web call. You'd be a pretty rich guy, right? It would be pretty nice. What we're seeing now is the ability to buy at the protocol level that basically the future financial systems being built upon. So in the same way, it would be nice to own a part of the protocol for TCP/IP. Now you can actually own the lending protocol, the insurance protocol, the trading protocol. And as the DeFi connects with traditional finance, and that's happening today, we're seeing traditional finance push billions of dollars into DeFi, creating yield and taking that yield out back to traditional finance. You can own that protocol, that 10, 20, 30, 40, 50, 100 years from now forms the basis, the back end of the financial system, and you can own a part of it, which I think is really interesting.
Yeah, it's rather interesting. But only one question.
Yeah.
You're doing every day, 24/7, right?
Yeah.
What about nervous? But the volatility of everything there is crazy, and to feel stable, to feel comfortable, how you do it?
Well, it's a good question. The volatility is difficult, but I lived in Russia for 10 years, so I'm used to volatility.
This is the explanation. In Russian we call it стрессоустойчивость. Стрессоустойчивость.
Да, когда я жил в Россию, это был, ну, я бы сказал, был рост, и так упал, был кризис, не кризис, и тогда я был привык к этому.
So after living in Russia, you can survive everything.
I think so. I think Russia is the best trading ground for crypto because you in Russia, when I came to Russia in the 1990s, I had a degree in economics and in Russian language. And my friends, they all thought that I was an idiot because in the 1990s, it was basically moving from communism to capitalism. So my friends, when I started studying, they said, John, you're an idiot. You're studying economics in Russian. There is no economy in Russia. And then of course, when I went to Russia and the economy grew and grew and grew, and I became successful, and then I was a genius that I saw it before everyone else. And then I was in Russia in 1998 when the market fell very sharply. And then I went back to New York and did investment banking. And then I was an idiot again. And so then I came back to Russia in the 2000s and Russia was growing like this and I was a genius again. So, you know, but what I realized is to get the return, you have to embrace the risk. And a lot of people thought Russia was too risky to invest. But a lot of investors made a lot of money in Russia, especially in the 1990s, in the early days, when things were not very clear. There wasn't a perfect framework for doing valuation of a Russian security. But I mean, people that said, well, there's a lot of gas in Russia. Maybe we should buy some Gazprom. That was basically, and you know, we don't really know what these vouchers are. We don't really know how they're going to be converted to shares. But we know there's a lot of gas there. So maybe we should buy some of these shares. That turned out to be the right decision. And so similar in today in crypto, everything is not perfectly clear, but there is amazing opportunity to make money but you have to embrace the risk. And so the volatility is something that I live with every day, but I've learned to love it because that also creates the opportunity for me to make money for my investors because of you don't get risk if you don't get return. So, you know, you have to basically be able to manage the two.
All right. So you're sleeping well.
Sleeping well.
Okay, it's nice. So do DeFi solutions currently have product market fit? What can you tell us about it?
Yeah, so it's really interesting. Last year when DeFi really started, the amount of collateral in the ecosystem was less than $1 billion in January of last year. And so you can think about it like in the example that I gave with the lending, where I have $100,000 of Bitcoin and I want to borrow $50,000 of US dollars, that I put $100,000 of Bitcoin, that's treated as collateral. And then somebody else who's lending me 50,000 puts $50,000 into a smart contract. So now there's $150,000. And then there's payments being made against that loan from me to the lender, which could be several $1,000s. So that's just one trade representing, you know, $150,000 probably to $200,000 over the course of the loan in terms of collateral and total value locked. And so the amount of collateral that, you know, so that's just one example, but you have lots of people doing similar transactions. The amount of collateral, the total value locked, grew from less than 1 billion last year in January till August. It grew to 15 billion. So 15x in 8 months, and then basically closed the year closer to 20 billion. And it reached 70 billion so far this year, going from 20 to 70. So it's you know what we're seeing right now, something growing from less than $1 billion to 70 billion inside of 18 months. That is a really good sign of product market fit, because you're having not $10, not $10,000, not $10 million, not $10 billion. You're having, you know, a massive amount, tens of billions of dollars, and soon to be, I believe, hundreds of billions of dollars of value going across this ecosystem, which is indicative of product market fit, because you have perfect visibility into the assets, the growth of the assets. You have perfect visibility into the cash flows and the growth of those cash flows. And so it's more and more people using these services, creating those assets, creating those cash flows. And that's what's so exciting about it, is because it's very clear that we're in the midst of a parabolic curve. And when parabolic curves happen, it's very difficult for the human mind to appreciate, because when you see something growing at 10% a week, basically the compounding effects of that growth is difficult to imagine. But I think, Evgeny, you remember when you had your first mobile phone, and then you had a friend, maybe 2 or 3 friends who had mobile phones.
Right.
And then you knew 50 of your friends had mobile phones. And then 6 months later, everybody had a mobile phone. And then everybody had 2 or 3 mobile phones. And so that type of exponential curve, I think we've all experienced through mobile. But with crypto, it's happening even faster than the mobile growth, which is really interesting. That's why we believe we're in the midst of a parabolic curve where product market fit has been met.
By the way, I see changes every day. And John, my question is very simple. Look, you see changes in 2015, from 2015 till 2020. You see changes from 2020 up to now. And by the way, very small, very short period. But anyway, from 20 to now, 21. But everything is changing. Changes are dramatically. It's really dramatical. How can you explain what is changing just now? How you feel it?
Well, I think that my macro perspective is the world is awash in liquidity, because when the COVID crisis began, all the central banks decided that they were going to push more and more money into the ecosystem, into their economies. And that has had the effect of increasing asset prices, because when money's free, then assets are cheap, right? If someone's like, Evgeny, I'm going to just give you free money, then you don't really care if the car costs, $30,000 or $35,000, because the money's free. And that's what the central banks have pushed so much liquidity into the economies that there's big distortions in terms of value. That, for instance, the U.S. stock market is at all-time highs. Real estate in the United States, all-time highs. Basically, the risk tolerance for people is extremely high right now because money is free. But I think that doesn't last forever, right? At some point, the central banks have to basically take money out of the system, increase interest rates. But right now, what we're seeing is that people that are investing in risk assets like cryptocurrencies, like equities, are getting big returns because of where we are in the cycle. And the cycle will not last forever, but I do think the current cycle that we're in, the macro of basically risk on, because it's basically there's the central banks are providing so much liquidity at such low rates. So basically, you want to be in the market, you want to be aggressive in the market because it's a risk-on market. And I think that DeFi within crypto is one of the most interesting risk-adjusted return opportunities in the world, because it's growing so quickly. And so in a risk-on macro environment, you want to be investing in high-growth assets. And crypto, especially DeFi, is one of the fastest growing asset classes in the world.
Yeah, I got. By the way, but just now we see the huge pressing of regulators all over the world. You see what's going on in India, as well Iran. I understand that Iran it's nothing, but anyway, Iran. What else? India, Iran. Afterwards,
China. There's been
China. It's the biggest. It's the biggest problem. But Turkish also some pressing from the side of Turkish government, and they told also that it's forbidden for you to use or to make transactions. Okay, so pressing pressing. And just now we are switching to China, because China it's a huge market. It's to my view, it's market number one for cryptocurrencies and for crypto activities and for mining.
Mining, yeah.
So what's going on? What is the crackdown about? What's in China? What's going on?
Yeah.
Isn't it the end of successful story? And wouldn't it be this end of big wave? Maybe even so. What do you think?
So
Uptrend.
I think that the countries that really want to control that basically all the activities, all the financial activities of their populations, those are the ones that are coming down the hardest on cryptocurrencies. For instance, I think that the currency controls in Turkey are very, very strict, because the Turkish lira has had a lot of problems, quite frankly, and the devaluation of the Turkish lira. I think within Iran is a country that is massive financial sanctions placed against it, and it's having a very difficult time. But to your point, China is the most important market where regulations are coming, and so China has said that they are going to regulate Bitcoin mining, and so Bitcoin miners are using a huge amount of electricity in China. And I think that the Chinese government wants that electricity to be used for other domestic purposes, for building out other industries. And so the Chinese government has said that the Chinese miners need to not use all that energy. And so what's happening now, Chinese miners are taking their mining rigs and they're moving them to places like Russia. They're moving them to places like Central Asia and to North America, so that what we're seeing is, before there was maybe 65% of all Bitcoin mining was done inside of China, using energy sources like coal, very dirty, not very friendly to the environment. And what we're seeing now is a lot of that mining market share is going to North America, going to Russia, and Russia has huge hydro assets that can generate massive amounts of electricity, but they're sitting in the middle of Siberia where people don't need the electricity. And so it's not a bad thing to say, okay, well, we can use this orphaned energy in Siberia to basically power these blockchain networks. But what we're seeing is there's a migration out of China into places like Russia, into places like America. And it's because the Chinese, their most important thing for them is control, and they are on the one hand, they're cracking down on cryptocurrencies, but on the other hand, they're the first country to create a digital yuan, the digital sovereign currency. So they're leading in basically they're saying, we're pushing it. You don't need to do all this crypto stuff because we have our own, the China crypto, the digital yuan, and that's the thing that we want you to use. We don't want you to use Bitcoin, Ether, Aave, Maker. We want you to be using the Chinese digital currency. So it's a little bit of a nuanced, because on the one hand, you could say they were trying to kill crypto, but yet they're launching their own crypto. If you look at the Russian central bank, they don't like Bitcoin transactions because of taxes, but they're pushing a digital ruble. That's going to happen, and in coordination.
Frankly, they are not pushing. Frankly, they don't understand what they can do. They are waiting, they're looking, and they're looking, for example, to the side of China. And it's very interesting process just now. There is two types of opposition. I am speaking about politics. In opposition, there is opposition that you love, and there is the second part, opposition that you don't like. So the position that you like and you prefer, it will be the cryptocurrencies produced by central banks. But they haven't started to produce them yet, because there is a lot of questions. And the main question is that after the Central Bank of China, Central Bank of Russia will create this new asset. Finally, I don't understand what is the position of banks in this game. Do you need in this game banks and financial institution? And all types of financial multimediators. You don't need them.
No.
So you're crushing the system. They're afraid to crush it.
Yeah, I think that the system is changing because money is becoming programmatic. So imagine in the middle of the crisis, they're saying, Yevgeny, you have to stay at home because of COVID. You have to stay at home, but we're going to pay you money, and so that you can afford to pay all of your bills and pay your food. But we're going to send you digital money that you can only use to buy food or maybe only pay your electricity. So you couldn't take the money and maybe go gambling with it or go spend it on alcohol or cigarettes. But we're going to say you can only spend this money to do this specific thing. Well, that's what they're building. They're building money that could say Yevgeny can only use this money to buy food. And that programmatic element creates a lot of options for people in central banks, because then they're not just pushing liquidity, just pushing money in the system. They're saying, okay, we're pushing money to Yevgeny, or we're pushing to money just to people in Kirov or Smolensk or Ufa, and we're saying just maybe we're only giving it to pensioners, or we're only giving it to people that have filed unemployment, and it's instantaneous, but they can only use this money for this specific purpose. And so I think on the one hand, you could say, it's very negative. It's destroying the financial system, but it's also, you can look at it as a positive of it's creating a lot more flexibility for governments and central banks to deploy capital more effectively in a digital way.
Yeah, for them, yes. For them, it's a possibility to control. But for us, and you know what will be after that? You are living in Russia. So there are pension coins, there are pioneer coins, there are Doge coins, but we will start to change each other. And finally, it's Russia. And we will find some tricks. Without it, we cannot live here in this country.
Of course. Well, I think that the crypto is permissionless. I think the digital ruble and the digital yuan will be permissioned. And so it'll be, the permissions will be, you can only spend this money for this purpose. In crypto, you can basically convert that money into really other forms of money and do different types of things with it. And it's basically, it's much more flexible and open and transparent. I think that the digital yuan, the digital ruble, the digital dollar will be, somewhat like Big Brother, like you mentioned. It'll be very much controlled. And it'll be controlled down to the micro level of, you can not spend 1 kopeck towards alcohol with this money. And so, but you can buy bread, you can buy milk. And so it's changing behavior.
I don't like this world.
I know, but it's the world we live in.
Yeah, and so how can you characterize this world just now and the appetite for risk just now after all these changes? How do you think about it?
Well, we saw a sharp sell-off of cryptocurrencies about 2 weeks ago, and the market had been very, very strong for all year long. And so, even though the market fell, 2 weeks ago, it's still 2 or 3 times higher than it was at the beginning of the year. So these things are not linear. It doesn't grow in a straight line. And if you look at the value of cryptocurrencies, it's gone up and then down, but generally it's up and to the right. You see
the trend is up. Big trend is up.
But like if you focus on this section of a very long data series, and it's like this section goes down, you can say, oh no, the sky is falling, it's terrible. But if you look at basically any sort of time period, a reasonable time period, you'll see that there's been value accretion. So I think that as we go from, the total market cap of crypto is about $1.5 trillion today. And it was 2 weeks ago, it was 2 trillion. But 5 years ago, it was several hundred billion. So it's been growing very, very steadily. And I think that in the short term, there's going to be a lot of volatility. Medium term, the long term, there's going to be a lot of value accretion. So I don't get too worried about, when markets go down. I buy more when markets go down. There's a saying in English, buy the dip. And so when things fall, that's
I
when you got
got
to buy. Yeah. So that's what I've been
right.
doing, buying the dip.
But let us imagine that, for example, the market started to be bearish,
Yeah.
not bullish like it was. For example, bearish.
Yeah.
So there are a lot of cryptocurrencies. Is Bitcoin the most stable for them? And my question, I will change the question. I will ask you another way. If the market is bearish, in which cryptocurrencies you will prefer to be?
So if the market's bearish, I would not prefer to be in cryptocurrencies because I think that when in a bearish market, all risk assets, including real estate, including equities and cryptocurrencies, will do poorly in terms of just value appreciation. Where I think is interesting with the cryptocurrencies in a bear market is arbitrage opportunities. So these are market neutral strategies where you can basically be not taking market risk, but you're basically playing the value between two assets or more than two assets to basically arbitrage the value between those assets. So you're not betting on the market going up, you're not betting on it going down, you're just seeing inefficiencies in the market and to arbitrage those small opportunities. So you don't care if the market's going up or down, you just want there to be inefficiencies that you can take advantage of. So that's the part where I would be participating in a bear market, not looking for appreciation of the token, but looking at inefficiencies between tokens to basically take some value in arbitrage strategies.
All right, John, let's switch to your day-to-day job.
Yeah.
So some words about your company, about the Central Park Capital, what you're doing and how it's based and how you're making money there.
Sure. Decentral Park Capital is a digital asset manager. We manage about $90 million currently, and we are investing in digital assets. We are launching, we're basically our first fund, we're returning back to our investors this year, and we're doing our second fund. So we're raising $75 million in our second fund. But generally, our focus is on decentralized finance. It's where we've made the most money, and it's really identifying protocols and tokens at very early stages before when they have market caps, less than call it $200 million, and trying to buy the ones that have the potential to grow into multi-billion-dollar tokens. And we've done that historically. We've been able to find those tokens early, and we've made very good returns for our investors. We made over 10 times last year. And so we have happy investors that have asked us to do our next fund. And the next fund is launching this summer. And then we'll basically invest that fund for 2 years. And then we'll basically, after that, we'll return that fund, all the money that we make. We keep 30%, and our investors keep 70%. So if somebody invested $1 million in the fund, they would get $1,200,000 back, so 20% return. And then after that, they would get 70% and we would get 30%. So we only make money when our investors make money. And so, but we make good money when our investors make good money. So we're very focused on making money for our investors, because the more money they make, the more money we make. And so that's how we make money.
Okay, but you speak about the success fee.
Yes,
What about management fee? Do you have also management fee?
we do. It's 2% a year, and it's just to pay for staff and technology. We have team members in London, Moscow, in the United States, and that's to just pay salaries. But really, nobody's here to work for a salary. Everyone's here to work for carried interest, which is the profit share of the money that we make for investors. So that's the main focus.
So, principally, it's not huge changes. There is not big difference. I'm also from the beginning. Finally, there is no big difference between the politics of your company and politics of a regular asset management company in everywhere in the world, and the point of 220 or something like this, it's obviously there and here, right? The same principles.
So yeah, the economics are a little bit different because it's 3 and 30 over a 20% hurdle. But in general, the business is run just like an asset management business anywhere in the world. We have fund administrators, we have accountants, we have lawyers, we have audited financial statements. The funds are run. We have a basically a Cayman structure where all the funds are run, because we have a lot of international investors. We have a lot of Russian investors that basically prefer to invest through offshore vehicles like in the Cayman Islands. But it's run as a very institutional financial asset management group. And so it's very typical in finance to have these types of structures.
So for you, generally, there is no dramatical change between your previous work and here. The same principles.
Same principles. Make money for investors. Make money for yourself.
Absolutely right. As for me. Okay. Can I ask you, how can you track and analyze the development of the ecosystems? So how are you working on the sphere of analysis and tracking?
Yeah, so we've built a lot of proprietary technology in-house that helps us to take all of the on-chain blockchain data. As we talked about, every transaction is on the blockchain for these protocols. We take all of those data sets and put them into our basically it's business analytics platform that we call the Whopper. So we put all of this ingest all of this information into the Whopper, and then we do kind of some sort of valuation methodology on top, whether that be a multiple on a cash flow, a multiple on an asset, and that gives us this fair market value. And so we're tracking the basically there's a huge amount of data being created by these protocols. We're taking all of that data, ingesting it, analyzing it, and then creating our fair market value based upon all that on-chain data. And so we think that we're, if not the first, one of the first to be doing this at scale, that are taking a lot of different protocols and basically doing fundamental analysis based on-chain activity. And it's been very successful for us thus far. And that's what we're doing in the second fund with our $75 million second fund.
All right. Now I will ask, look, there are different investment strategies, conservative, balanced somehow, or speculative, but it's in the regular world of investment.
Yeah.
In your side, what is your investment policy, and what ideas you take when you choose one or other assets, and how you are ruling money? What are you doing?
Yeah. So again, so much of the price of a token is based on how much growth there is. And so what we've seen is a positive correlation between growth of assets and cash flows and growth in the price of the token. And so we're very focused on basically on fundamentals, based on real cash flows, based on real assets, and valuing those tokens based on those methodologies. We're not the guys that are going to pick the next Dogecoin. It's not. We're not. It's for something that's thematic or meme driven that doesn't have a basis in fundamentals. We're not the people that are going to pick those tokens the best. There's other people, I'm sure, that know social media better than I do, and then can pick which next pump is going to be. But yeah, so we're just focused primarily on fundamentals.
Okay. Look, what about the regular currencies? I mean, fiat currencies. How do you think they will disappear in the future? What is their future? Disappearing or coexisting, cooperation somehow? How do you think?
Yeah. I think they'll can continue to coexist. I think that for every country, they need their own currency, and you can, in every currency, you can only pay your taxes inside of that currency. So it creates demand for that currency because it's the only way that you can pay your taxes. So In the United States, I can't pay for my taxes in Russian rubles. And in Russia, you can't pay for your taxes in US dollars. And so there's
If
always,
we will start to print them, yes.
yeah, exactly. But so there's always going to be the need for a national currency. But I do think that if you look at, especially if you look at the US dollar, what they're doing, they're printing money and printing money and printing money. If you look at the money supply measured by M2, it's mind-boggling, the trillions and trillions and trillions of dollars that have just been created out of thin air. And then the rest of the world has to basically deal with the fact that there's a lot more dollars in the ecosystem. And so the value, so it's very discretionary. The US decides how much money to print. In cryptocurrency, it's based on code, it's based on law. And so there's no discretion. There's in Bitcoin, there will only be 21 million Bitcoin ever produced. And that creates digital scarcity in a way that the US dollar does not have. The US dollar can print another $1 trillion. Joe Biden can say, I want to take care of pensioners, another $3 billion. I want to take, or Trump can say, I want to build a wall in Mexico, another $1 trillion. So they can continue to make these decisions based on their discretion that creates more and more money and devalues. But the US dollar is in the process of being devalued. You see it here in the US that the price of food, the price of lumber, the price of real estate, all going up. And the reason everything's going up is because money's free. And so, if you look at, commodities where Russia has very strong position, the price of commodities is going up, which is great for Russia, but it's going up in dollar terms. If you look at the same, is it going up in gold terms? Not so much. Is it going up in Bitcoin terms? Definitely not. So it all depends on your lens, how you're looking at the increase in prices. But today, the financial system is based on the dollar. The commodities are based on the dollar. Do I think that's the case, 50, 100 years from now? I don't think so. I think that the system's changing. I think there's countries like Russia, countries like China that don't want the US dollar to be the global store of value. They probably want their own currencies to be the global store of value because there's lots of competitive advantages. But I think that they would rather see cryptocurrency be a store of value than the US dollar, because there's a saying that the enemy of my enemy is my friend. And I think that they would like to have, if they can't control it, they would like at least not to have their adversary control it. So I think that's something that's going. So crypto, I think it's part of this global change that's happening within the financial system.
Does it mean that all your pension money you can invest to cryptocurrencies?
No, you shouldn't. I wouldn't recommend anyone investing more than 5 or 10% of their assets. Some people only invest 1 or 2%. But because crypto is growing very quickly, if you invest 2, 3, 5% of your assets in crypto, maybe in a year, it's worth 15, 20% of your assets.
It's okay.
And then in 2 years, all of a sudden, that 2% is now 30, 40, 50% of your assets. And that's what happened to me. And it's happened to a lot of people that I know in the crypto space, because it's appreciating so much more quickly than the rest of the assets in your portfolio. It becomes a bigger part of your assets over time. But to start, I don't recommend anyone investing more than, say, 5% of their total assets in crypto, because it's very risky, right? There are real risks. It's not a a spare bank bond, right? You're buying a piece of technology, but you're basically making the bet: do I want to own TCP/IP in 1985? And if you believe the thesis that these tokens can become part of the plumbing, the back end of a global financial system, do you want to participate in that or not? Everyone will make their own decision. But I wish that I could have bought TCP/IP in 1985 and gotten paid a billionth of a cent every time someone did a web call, but that wasn't available. But what is available is for me to participate in the creation of the global financial system and own the underlying protocols that all this is being built upon. And I think that's really exciting.
But in this case, how do you think? Is the cryptocurrencies somehow safety haven against inflation? Can we call it safety haven or not?
So I think that the cryptocurrency that's best suited for inflation is Bitcoin, because Bitcoin does have digital scarcity. So there's only 21 million Bitcoin ever created. And right now, about 18 and a half or 19 million Bitcoin have already been created. So there's basically only 2 or 3 million Bitcoin to be created in the future. And that's going to be created over like the next 100 years. So that the emission rates of Bitcoins is going down like this to zero. And so when you have something that has digital scarcity, that a lot of people are saying that is a good thing to have in your portfolio to hedge against inflation. And you're seeing companies like Tesla and MicroStrategy and Square buy hundreds of millions or billions of dollars of Bitcoin and put it on their corporate treasuries. And so that we've seen examples of companies like, and not only those, but like large insurance companies, that are very conservative. They're also buying Bitcoin on their, because they're also seeing the dollar is being devalued currently. We're watching it, right? It's happening. It's not theoretical. It's whether it's being printed through CPI or not is almost irrelevant. But you can just see that there's an asset bubble that's happening, and people want to have something that has scarcity, like gold, like fine art, and basically Bitcoin, I think, is a very liquid form of gold, because similar has costs to get it, to lifting costs to get, like getting gold out of the ground. You have mining costs for Bitcoin, and then there's amount of energy that's being used to support the ecosystem, and it's a huge amount of energy. So that is basically the security of the Bitcoin blockchain. The Bitcoin blockchain is the most secure computer system in the world. Not even Russian hackers can hack into the Bitcoin blockchain and change what happened in the past. Because if you could, if somebody could hack into Bitcoin and change the ledger, you could make hundreds of billions of dollars, close to $1 trillion. Nobody's been able to do it yet, and I don't think anybody's gonna be able to do it in the future. Okay,
John, finally, you are trying to avoid the straight answer. Please answer me straightly. Big investment multimediators like big banks, Credit Suisse or Deutsche Bank or others, finally, they will exist or not? Because if the world will switch sooner or later to the cryptocurrencies, crypto assets, the world doesn't need such a multimediators, big fat cats, that they're eating our blood, they're drinking our blood. So finally, they will exist or not?
I think they will exist. I think that but they'll change. Really, just much like the music industry changed with the advent of the internet, and that content could be digitized and shared. But eventually, it built streaming services like Spotify and Zvooq and other systems. So I think that it'll force those financial institutions to change, hopefully to the better, and to become more transparent, more inclusive, and more efficient, because there's so much fat inside these financial institutions that for me to send, for instance, money to you using a Venmo or some sort of money service, it probably touches 10 financial intermediaries between me and you. Takes a lot of time. Or with cryptocurrency, it goes directly from me directly to you with no financial intermediaries. And so and that transaction is 100% transparent because it's on a blockchain, and I don't need to ask the government permission, and you don't need to ask your government for permission. So it offers a lot of different values that are going to have to try to be captured by these financial institutions. What we're seeing in America, interestingly, is that JP Morgan Chase, one of the largest banks in America, the CEO of JP Morgan is Jamie Dimon. And 5 years ago, he hated Bitcoin. He thought it was toxic. 2 or 3 years ago, he was still saying very negative things about it. And this year, JP Morgan has announced a new fund for basically making investments in Bitcoin. And so it's over time, the people say they hate it, they hate it, they hate it, and then they see it's not stopping. It is going forward. It's a technology like the internet, and you have to either embrace the technology or be left behind. And so the financial institutions that are going to be successful in the future are going to have to use the technology, not run away from it, because certain parts of their business will be disrupted, but they can create new value using this technology. And I think they just have to be creative, and the best banks will be the most creative banks.
It's like ExxonMobil and British Petroleum and others, that some days ago there were oil companies, pure oil companies. Now not. Now they are green energy companies. And what you're speaking about oil, who cares about oil? Do you think about coal? No, only green energy companies. I like. In Russian, there is a very good name for this process. It's named переобуться. I don't know how to translate it into English, but it's a very, very fast process that you are changing your boots. You're changing your boots in the way. You're in the way, and straightly you're changing your boots and you're running further. It's rather funny, but the same process.
Well, I think what we're seeing now is you have to innovate, be innovative or die. And this technology, it should be embraced by people that are looking to innovate. And I think it's probably scary to people that are trying to protect their legacy businesses, because those are likely to be disrupted. But it also creates a lot of opportunities for people that are creative and that can embrace the technology.
All right. John, previous year it was rather successful year for your companies. I mean, financial, very good results, and very big, a lot of plans, and you are feeling like really kings in the cryptocurrency, kings in this sector. Okay, now I think that maybe times not changes, but a lot of difficulties. And how you're planning to rule business afterwards, and how you're ruling business now, and what are your plans for the future, for this future, in some days, in some months, for a current period? How you will make money just now?
Yeah, so we had an amazing year last year. We made a lot of money for our investors. We made over 10 times. And so that was great. And now those investors have asked us to do our second fund. And so we're in the process of closing our second fund. It will be a $75 million fund that we'll invest for 2 years. And we're looking to make in between 5 and 10 times our investors' money from that fund. And the way that we're going to do it is the same way that we've done it historically, is that we're basically taking all of the on-chain data, we're analyzing it, and we're basically, there's almost like a venture capital component, because you have to not only understand how these things trade as assets, but the underlying technology, and it's not just the technology is built by people. So there's a team involved there's a community involved. And so you have to basically understand not only how these things trade, but also the underlying technology and who's building the technology. And so I have a background in venture capital and tech investment banking. And so I've been using that background plus my trading background at Deutsche Bank to help create our investment thesis on how to identify tokens when they have market caps of, say, less than 200 million, but have the potential to grow to multi-billion-dollar market caps. So that's really our main focus, is identifying early stage opportunities, which is almost impossible to do for an individual, because it's moving so fast. There's 8,000 tokens and more growing every day. And so there's a super long tail, and very few of them will grow to be multi-billion-dollar tokens. If you look at maybe the top 300 tokens represent over 95% of the total market cap. And so identifying those ones that are super small, that have the potential to be really large, is difficult for anyone. And we have a team of 7 people in technology methodologies that we've perfected over the last 3 years. And we find it challenging because there's so much coming to market. But so what we're going to continue to do, what we've been doing, we think that we can now, off of a larger fund, even be more successful. And we're looking to make our investors a lot of money over the next 2 years so that we can make ourselves money. But yeah, the same strategies, the same infrastructure that we've done to produce 10 times returns last year, we'll be employing for the next 2 years.
John, you know that in the new markets, all the times, there are a lot of difficult things. For example, even pirates, even bandits, even some kind of thieves, and you know it, new business with high risk and also with high return. And how can I, a regular investor, okay, for example, I decided to invest 5, maybe 5% from all my money to cryptocurrencies to this world. But how can I understand that this fund is thieves or bandits, and that fund is normal guys? How can I understand the difference? Because for me, you're looking very nice. Okay, with your corona, you're looking extremely nice, like a king of cryptocurrencies. But how can I understand that I can trust to that fund and I cannot trust to another fund? Can you give me some definitions, some advices?
Yeah, there's a хорошая поговорка: доверяй, но проверяй.
Exactly. Exactly.
So, I mean, I think that you have to do a certain level of diligence. You have to see, which fund administrator is reconciling all of the trades. Is this a good one? Are they using good lawyers with basic proper legal structures? Are they using good accountants? Are they using good tax people? All of these service providers, I think, can provide comfort that because if you're working with blue chip advisors, there's no way if you're a bandit that they will accept you as a client. So then I think as an investor, you can be sure that the fund they're not thieves. But yeah, I think it's very difficult to basically, because it's a new industry and nobody has a 10-year track record in cryptocurrencies. It's not, and Goldman Sachs is just starting to their crypto desk. And so a lot of the traditional financial institutions that are well respected and trusted, they're not in this space. And so you have to go to the new service providers that are just building their businesses, like Decentral Park, and basically make investments through those vehicles, because that's the only way that you can get the exposure that in the fastest growing subsector of cryptocurrency in DeFi. It's not possible to invest through JP Morgan. You can invest in their Bitcoin fund and they'll charge you 2 and 20 to hold Bitcoin for you, which is a terrible idea. You should just buy your own Bitcoin and not pay any fees to anyone. So, but those types of assets you can buy yourself, can custody yourself. But with DeFi, you need to partner with someone. So if not Decentral Park Capital, someone like Decentral Park Capital, because it's otherwise you're not going to find the early protocols that grow 10, 20, 30x. It's you can only really invest in things that are large cap, that aren't growing as fast. So it's I think you need to be caveat emptor is a Latin phrase that means buyer beware, and I think you should always be very cautious, and you should do your due diligence on your partners. But this is a good space. Decentralized finance is a good space to partner with someone, because otherwise you can't really participate in this space, because it's too complex, it's too fast moving. So that's what I would do. I would focus on trying to find good managers and partner with a good manager around decentralized finance.
Thank you. And look, okay, soon, for example, I decided to invest 3-5% to this sector. Great. I founded crypto fund, crypto company that looks for me very trustful, and I would like to give them money. But how can I do it? What are the process that a regular investor can take part in this game? How can he receive the exposure on the sector? What to do? Can you recommend me?
Yeah, I mean, I can speak to our fund. Our fund is for accredited investors only. So we don't deal with small retail investors. That the minimum investment for our fund is $500,000. So and you have to demonstrate that you have more assets and you are accredited. So I think that for us, we're really building for family offices and high net worth individuals that are looking to take a small percentage of their total assets and put them into crypto and put them into decentralized finance. But for retail investors, most of your listeners, it's things like Bitcoin and Ethereum. You can buy yourself, you can host yourself, you can go onto exchanges, decentralized exchanges like Uniswap, like SushiSwap, and you can go once you convert into Ethereum, you can then buy any token in the world. But I would probably suggest that you only stick to the top 20, maybe 50 protocols in terms of market cap, because if you try to get too early, there's a lot of fraud and there's a lot of scams, and you have to have a really deep, intense process to understand. So it's very, very risky. But that's also where all the returns are. That's why we like to play there, but we have a specialized knowledge team technology to do that. But for retail investors, you probably only want to stick on the larger cap names, which don't offer as much upside potential, but also don't have as much risk.
Okay. Cryptocurrencies, DeFi technology, it's a new ocean that exists, frankly, 6 or 7 years ago. He started to exist only 6 or 7 years ago. And frankly, you are one of that fishes that started to swim in this ocean from the start, from the beginning. Mm-hmm. And now you sit behind me like a king with this corona, and a king of cryptocurrencies and this, how to say it, царство государство. I don't know how to translate it in English, but I think that guys understood me. So, give me please, and not only to me, but to everybody who are with us, tell me please, what is your good advice to those who would like to take exposure on the sector and would like regular investors that started to invest? What advice can you give like a fish that knows all in out in this ocean? Your advice.
So first of all, you should only use capital that you're willing to lose. So your risk, you should not spend your pension money on crypto necessarily. You should basically have a certain amount of capital that's risk capital that you're seeking to multiply. If you think about your overall portfolio, you have real estate, maybe some shares, some stock, and some bonds, and then cryptocurrency can fit into that overall portfolio and be one of your riskiest assets. I think that you should have, within that bucket of crypto, I think maybe half of that bucket should be in DeFi. The other half could be in Ethereum, and then Bitcoin as well. But I think that DeFi is the fastest growing subsector of crypto. And so last year, it represented less than 1% of total market cap for crypto. And this year, it's already at 6%. I think by the end of this year, it'll probably be 10 or 15%. And so, the total size of the crypto market's growing, but DeFi is growing much more quickly within crypto. So it should probably be, I would say, within your crypto holdings, DeFi should be 50% of those holdings. The rest you can do yourself, I think, with Bitcoin, Ethereum, other large caps. But the small cap DeFi names, where I think you can make the most money and the best risk-adjusted returns, that should be maybe 50% of your total crypto holdings. And again, your crypto holdings should probably not be more than 5 or 10% of your total holdings. And that's the way that I would look at it.
Thank you so much. But let me ask you the last question. It will be a very provocational question. Mm-hmm. First of all, I apologize for this. But anyway, in the beginning, you told that everything in the DeFi sector is based on a real cash flow process. A real cash flow process permits us to receive the real profits. How can we be sure that the process of cash flow and the profits they're not avoiding my pocket? How can I know that finally it's not going somewhere but not to my pocket? And how can be sure that all this game is a real game? Because look, I told you that this ocean is existing only 6 years, 7 years. How can I be sure that everything that we do is not Politik? It's not it's Yiddish, by the way. It's not bullshit.
Mhm.
I don't know, but how can you tell me? How can you prove me that I'm right, that maybe I would like to invest something? Prove
Yeah.
me.
So I think that if you can read the code, for each of these protocols, and then if you can look at the on-chain data that shows that every single transaction and the aggregate of every single transaction is on the blockchain, you basically can get comfortable because it is a perfect audit trail. So you have numbers that are audited in the blockchain every minute of every day, ever since the very beginning. So, for instance, it's impossible to know the earnings per share of Spare or Chase because these are black boxes and there's no way to look inside to understand what the earnings per share is going to be. On these protocols, you know exactly what the earnings per share, the earnings per token are because all the information is public. All the information is on a public blockchain. So, and then the value capture, is basically written in the code. And so it's not, if you can read the code, you can, and then within cryptocurrencies, the code is law because these are just basically smart contracts that are being executed. And so it's basically running autonomously. So there's no discretion. It's not like the manager can say of this, protocol, okay, today we're gonna make this change. The entire community and there's governance around these communities have to come together to agree on any changes. So it's the tokens are owned by the community, and the community is focused on building out this service and building out value to other people. So it's different than traditional financial institutions that you probably trust, even though you can't see inside them. Here, maybe you can see everything that's going on inside them, but they're so new that you don't trust them as much as the old institutions that you can't see what's going inside. So it's a little bit of a conflict, but the more that you can understand on-chain data, the more that you can understand what the code is, what the law is within the protocol, the more comfortable you can get around valuing these assets and holding these assets.
Thank you, John. Frankly, it was a huge pleasure for me to receive a call with you and to discuss with you such a very sophisticated but rather interesting questions. Друзья, я думаю, что с Джоном на эту тему, вообще вот на тему крипты, на тему DeFi технологий, на тему блокчейна можно говорить, наверное, неделями, месяцами. И вы знаете, очень редко на нашем рынке, вот правда очень редко, можно встретить не тех людей, которые говорят, мы специалисты, мы знаем, биток будет завтра, там, не знаю, 100 тысяч, миллион будет завтра. Когда спрашиваешь, почему, мне так кажется, я в этом уверен, но это бред. И вот когда ты встречаешь по-настоящему специалистов, которые не гонятся за какими-то, вот знаете, лозунгами, а которые нормально делают деньги и работают на основе нормального человеческого анализа. Ну, это интересно. Поэтому мне показалось, что, наверное, наш разговор с Джоном, может быть, для кого-то будет сложный, может быть, для кого-то будет безумно интересный. Но самое главное, это честный разговор с человеком, который действительно знает вот эти процессы на кончиках пальцев и не то чтобы вот верит в будущее крипты. Нет, он это делает. Он работает над будущим крипты и над будущим вот этих вот распределенных технологий. Потому что, наверное, действительно за этими технологиями стоит и революция, которая происходит на наших глазах. Потому что, на мой взгляд, действительно блокчейн – это революция. И она потихоньку будет менять наш мир, как наш мир изменил в свое время интернет. По сути, после возникновения интернета, наверное, возникновение блокчейна, может быть, это вторая по своему значению революция, значение которой мы поймем только, наверное, лет через 10, может быть, через 20. А вы как думаете, Джон?
Я полностью согласен с вами. Это было очень приятно разговаривать с вами сегодня. И я бы хотел тоже передать большой привет всем моим друзьям в Россию. Я с вами.
Thank you, Джон. Спасибо. Спасибо вам огромное, друзья. Всего вам самого доброго.
До
Спасибо.
свидания.
До свидания.